Welcome back to the show, everybody. Check out these numbers here while we run the headlines. Oh my goodness, have we got a video for you today. Tornado cash. Could ETH plunge sub 500? Bitcoin back into teens? We'll talk about it. And how about USD Tether? Are they really facing criminal charges? Australia signals crypto regulation stance. FDIC cease and desist. We got John Deaton in the news. $200 trillion explosion to the crypto market cap, says one macro investor, and I think so too, because the news today is R3 live with DTCC, that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on TikTok, YouTube, Twitter, and Facebook for exclusive content. It is 1 trillion. Well, let me refresh this page real quick, because it may have changed. It has. We've lost some money. $1.05 trillion is where the market cap is with Coin Paprika. Download that app and check it out. Very quickly, numbers right now, 21,200 plus, and we see Ethereum at 1,500 plus. XRP is at 33 cents, and we could have more downside in the market, but make sure you're paying attention to the opportunities that are right here in front of all of us, like I Trust Capital. And you know there's zero monthly fees for staking, 1% transaction fees. You can't get this anywhere else. And I tell you what else, they're doing staking now too. Make sure you click the link below to get the opportunity to check it out for yourself. In case you missed it, more than 50 crypto community members in Amsterdam were chanting "Open source is not a crime" on Saturday to protest the arrest of Tornado Cash developer Alexei Pertsev. Listen, the libertarian in me says the same thing. This is just wrong on all fronts. But this is the kind of things we see happening from governments and regulators around the world when they want to desperately control something, but they've not done what they need to, their job, and provide the clarity, the rules on the road. And I think there'll be more to come on all of this, and I hope that they straighten that matter out for Alexei. But I tell you this, I would look for decentralized platforms to start to have this requirement for KYC involved in it, or other things like that, to where if you release a platform as a developer without those things built in, you may be looking to run the path that Alexei's running. Not right, I get it. Not a fan, but I'm just saying, think about what the governments are looking at and the regulators. Bitcoin flirting in danger. Looks like we may revisit the teens soon, says this macro analysis right here. You know, it's all subjective, so we don't know. It's not financial advice from Agrays or me or anyone else on this channel, but there's more news here, and I'm not trying to put ice water in your veins or be an alarmist, but popular crypto analyst Justin Bennett tells his 105,000 plus Twitter followers that he sees Ethereum plunging to a bear market bottom around $300 as 2022 expires. I'm not going to go into it because you get the idea what's going on here. But when it comes to Ethereum, we know that there's a transition happening between September 15th and 16th from proof of work to proof of stake. Now, this is what Grayscale had to say about this. As far as that goes, they said there's a huge difference between Ethereum network in 2016 as it is the Ethereum network today. Over the last 6 years, Ethereum has developed a robust ecosystem of users, decentralized applications, smart contracts, decentralized finance known as DeFi, and much, much more. In its detailed report, Grayscale explains everything except ETHgate, which I will just simply say right now. We're going to hear from John Deaton in a minute, but it's not about ETHgate. It's about Gary Gensler. But I'll tell you this is why they've looked so different 6 years later, is that they got a free pass from William Hinman and everyone else who may have participated in that free pass, we hope, for an investigation. But Grayscale explains here, proof of work of the current Ethereum network will bring duplicate instances of all these tokens. Now that's a problem, which could present meaningful challenges to developers and market participants. In fact, The sheer complexity of DeFi and the number of asset-backed tokens locked in DeFi protocols poses a catastrophic risk to the price of ETH work, which is what they're calling ETHW now, due to on-chain positions and attempting to be liquidated. So we're going to keep an eye on what's going on here. Remember, Vitalik, I believe it was himself that said only 50 or 51% of the network is really going to be moving to proof of stake. So I don't know. I don't want to see anyone lose money, but this looks like a really trying time for Ethereum, and we want to watch it closely. Right here, talking about the idea of Ethereum having more downside because of the hard fork, or Bitcoin seeing more downside, and that really was them suggesting, the dollar Dixie and following that chart for Ethereum as well. When the dollar is strong, there's a correlation between the dollar Dixie index, the dollar index, and crypto. If the dollar is strong, crypto is weak. That's usually, you can count on that. That's pretty standard. But now, with that being said, we have some other fundamental factors. Crypto exchange Bitfinex may be facing criminal investigation in the United States. The exchange's sister company has been hit with several investigations over who uses its platform and the state of its reserves. Now, I've been over this quite a bit here, ladies and gentlemen. I really, really have. And I want to give this to you right now.
So the most important thing when you are running a stable coin and you want it to be tethered to the underlying national currency, that in this case is the dollar, is having instruments in your portfolio that track the underlying currency, and of course you have to have the right type of reserves. As we have seen with U.S. Treasuries, we were able to fulfill around $7 billion in redemptions in 48 hours, 10 billion in 1 week, and around 20 billion in 1 month.
Paulo, thank you for that clarification, because I think what you explained there is that Tether is not literally pegged to the dollar. As the name and marketing suggest, it's pegged to your portfolio of assets, and that worth is determined by what the market believes, which isn't always stable and isn't always a dollar. It went as low as 96 cents earlier this year. So that may not be obvious to everyone. Thank you. Let's move on to those reserves. As you said, you're reducing the amount of commercial paper. You ultimately want to get that to zero. Have you ever used commercial paper holdings as collateral?
No.
You've never used, have you ever used treasuries as collateral?
Not that I know.
And do you have an outside management firm that manages treasury bills and commercial paper and your reserves?
Sorry, can you repeat that question again?
Does an outside firm manage your holdings of reserves of commercial paper, treasury bills, etc.?
No, we have.
The answer is no. Look, these are all three very damning no's, and that is the CTO of Tether. If you're wondering if we're going to have more downside, it's really up to the Department of Justice, right? If we see them come and hold, USD Tether to all of those no's, you can bet your ass there's more downside. Because look, let's take a look real quick here, if we could, right? We're talking about what, $47 billion? Yeah, hundreds, thousands, million, billion. $47 billion if that gets rug pulled. What do you think the market looks like then? I'm just asking. I'm asking for a friend. I'm asking for myself. But across the world, what we see is South Korean government will impose a gift tax for crypto airdrops. The gift tax rate ranging between 10 and 50%. Way to narrow it down, South Korea. Regulators will examine the airdrops on a case-by-case basis. That's interesting. Australia's new government finally signals a crypto regulating stance, and I tell you what, this sounds a lot like what I was talking about in reference to Tornado Cash. Now, again, the libertarian in me wants to see a free, truly decentralized platforms. But the reality is the Australian Treasurer Jim Chalmers here in the government says basically they're going to use token mapping exercise, which is one of the 12 recommendations. And token mapping, as you can understand, is not speaking to decentralization now, is it? Right? As it stands, the crypto sector is largely unregulated. We need to do some work to get the balance right so we can embrace new and innovative technologies. Now, again, I've said this before, if your KYC they can go wallet to wallet, but they don't necessarily know your identity. And to me, I think this is the right way to regulate activity. So if there's suspicious activity between wallet A and wallet B, they can have, reason to pull you over the way a cop pulls you over for speeding, right? I see a blue car riding down the road, but I don't know who you are, right? But if you are swerving or excessive speeding, you may get pulled by a cop. And then from there, they drill down on who you are, what's your business, what are you doing, all of that, right? So that seems to me to where we need to be headed, but we'll see more from that. But don't forget, Caroline Bowler, CEO of BTC Market, said the move mirrors calls from many in the industry to proportional, appropriate regulation of the sector. And again, I think it's more about activities than the entities. And that may help out Alexei in that Tornado Cash event as well. Meanwhile, we see more boot on the neck when it comes to crypto. FDIC announcements, Fed pronouncements this week. And this was basically FDIC sending a cease and desist letter to FTX. And obviously they did it to Voyager Digital too, claiming that they had made false statements. Yeah. And I believe that that's just more pressure all the way around to say, listen, we haven't done the regulation thing yet, so we're going to squash everybody, keep a suppression on the market until they're truly ready to do it. Now, talk about suppression on the market. This is an amazing article put out by Fox Business, written by John Deaton. Shout out to all of them for putting this out. I'm going to give you just the crux of the crock here, this main heart of this. It really explains it for anybody who really wants clarity. The Ripple case and the library case are really two keystone cases in helping define crypto if the SEC wins or if they lose. The case is now being heard in the federal court with Gensler's lawyers arguing the merits before the skeptical judge that has made series of rulings in Ripple's favor. We know John Deaton serves as amici curiae, representing 72,000 XRP holders, the majority of whom had never heard of the company Ripple when they acquired the token. Then the library case itself, which is also alleged about lack of disclosure. This one is Gensler's brainchild, the library case involving the digital token LBC. And it further underscores Gensler's intent to anoint the SEC as the primary regulator of crypto. Keep in mind, these are two very vastly different cryptocurrencies operating on separate blockchain networks, yet testing the same dangerous theory. For comparison, blockchains are the orange groves. But instead of producing oranges, each blockchain produces a native cryptocurrency. The Bitcoin network produces Bitcoin, the Ethereum network produces Ether, and the XRP ledger also has XRP, and so on. From Bitcoin on down, every network's token performs whatever function that the blockchain was invented to serve. The XRP ledger, on which Ripple and other unrelated companies operate their different businesses, use XRP, the network's native currency to settle transactions in other currencies. LBC, meanwhile, operates on the library blockchain like dollar bills left on a restaurant table for the server, tipping artists on a decentralized multimedia content platform. The most important thing to realize is that the SEC's allegations are not limited to when or how Ripple or library sold tokens. The SEC is asserting that both of these unique tokens are securities per se, no matter who sells them or why. It makes no distinction between the library or Ripple executives selling their tokens and the people who merely traded the cryptos later. If true, the SEC could then regulate secondary market sales independent of these companies, including sales made by exchanges and retail holders. It's like saying the Howie oranges eventually sold by a grocer are unregistered securities. Imagine the economic consequences for innocent consumers. This is so important. So important. And changing gears just a little bit here, if we get this right and we can get the SEC back in their own lane, I happen to believe, just like macro guru Raoul Pal believes, you could see a $200 trillion market cap burst for crypto. And you know what? This is what the interesting thing is about this. Let me just give you this right here. He says, what I do know is if I just extrapolate the network adoption effects, the number of users and where the number of users is going, and assume it gets to somewhere between 4 and 5 billion users in the next 10 years or so, which would be central bank digital currencies enabling it, all ticketing, a whole bunch of stuff going that way, the market cap of the crypto space goes from $1 trillion to $200 trillion. People don't realize the world has never seen an accumulation of wealth like that in history. This would be the shortest period of time of the largest accumulation of wealth ever seen. While Powell is extremely bullish on the long-term prospects of crypto, he acknowledges he could be wrong by a wide margin. I love what he says here. Even if I'm wrong, let's say I'm a total moron and I'm wrong by 90%. We'll see $20 trillion from $1 trillion. I'll still take that bet because it's still the best bet in the world, and that's by me being wrong 90%. I think he's got that right. You know, I mean, this is what we're talking about. And I want to make a point here. You know, the real point here is that, look, cryptocurrencies at some point will be trumped by the rest of the world tokenizing everything that they have. Whether it's the capital markets, real estate, NFTs, all those things, cryptocurrencies themselves will not be the largest part of the market for much longer. That much, I think, can go along with that. And to that point, if you have not seen my video from this morning on DLT, SEC vote to unanimously use DLT, possible relationship between PolySign, the Federal Reserve, and DTCC, go watch it, because we know that R3 had a relationship. We know that R3 has the core to settler platform, which does allow for digital asset settlement amongst many assets, including XRP. Well, XRP is a wholesale asset, according to R3, who has a great relationship with financial institutions and Depository Trust Clearing Corporation, which settles $1.6 quadrillion worth of settlement every year without fail. And guess what? They're excited to share that DTCC selected R3's Cordis platform as the underlying DLT for its Project Ion settlement platform, which is now live in a parallel production environment, processing over 100,000 transactions per day. Come on in. Who's excited about that? Because I am. Knee bone connected to the leg bone. R3 also sees XRP as a wholesale fungible asset, which would work perfectly for something like what they're talking about there in that instance of working with the DTCC and Project Ion, running live in parallel production. Now that tells me the new system is now running parallel to the old one, ladies and gentlemen. Yes. How about that? And then let's take a look at this. XRP overextended from the 20 moving average. It will come back to the 20 moving A. And it says right here, XRP retested the fib 0.786 on the daily bounce, which is bullish, they say. The parallel channel is still intact and XRP price is just ranging. XRP price has to flip 38 and 41 cents into support to continue the upside. Thank you to Egg Rad Crypto and all of you. Not financial advice from me or anyone else. This stuff is starting to take off, ladies and gentlemen. How about that? I'll catch you on the next one.